The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." "No way. We need a star like Ryan O'Neal to play Rocky." Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 23rd, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's really what it's all about. So let's go look at one of our tools. This is the tool I call Accentuate the Positive and Eliminate the Negative. You know, there's a great tune out there, and my favorite version is by Al Jarreau, great jazz singer. Accentuate the Positive. You know, you got to accentuate the positive. You got to eliminate the negative, and you got to latch on to the affirmative. Don't mess with Mr. In-Between. And that was really brought to us, those words, by Johnny Mercer back in the mid-'40s. And that message, it's still a good one here today. You know, at times, I don't know about you, but we tend to blame others for our misfortunes. And maybe you've never done this. I know that I have, but most certainly, when I fall prey to it, I say, no. What I've learned is that instead of wasting time and energy on anger and accusation, it's far more productive, at least it is for me, to focus on solutions and move away from the problem. That means accentuate the positive and eliminate the negative. I know that it can work for you as well. If anger, not really if, I know this to be true, anger feeds anger. And that's why it's so important to go ahead and eliminate the negative. If you're not a big believer that if you only, or I should say this, really, I'm not a big believer that if you only think positive thoughts, that only positive things will happen to you. I absolutely do not believe that. All you have to do, really, is to have walked in my shoes to know that that statement is absolutely false. But I do believe we can control our mind. We can control our emotions. And when we control our mind and our emotions, we control our life. I believe that. I just believe that with all of my heart. Ralph Waldo Emerson, he once said, the ancestor to every action is thought. So thought comes first, positive or negative, and next comes the action. The impossible, folks, the impossible is absolutely possible because it says, just spell the word, impossible. I am possible. So I just say thank you to Johnny Mercer. Accentuate the positive, eliminate the negative. Let's go check out the positive in these markets here. Right now we've got the Dow futures are up 38 points, trading out at 15,528. You got the S&P futures up a couple of points. They've been in this range here for quite some time here. The last, 8, 9, 10 hours at least. Trading out at 1692. NASDAQ futures trading out at 3050. That's up about 3.5 points. Russell 2000 up slightly. King dollar up a few ticks out there. Flat market inside the currency area. Japanese yen really with the biggest move, and not much of a move out there. Gold down $4 right now. Taking a little bit of a breather after some very nice action yesterday. Trading out at 13.31. Silver back about 29 cents. Trading out at 20.21. Light sweet crude. How about this? Light sweet crude back at 90 cents right now. Actually gave us a bearish reversal sign yesterday. We'll take a look at the continuous contract for light sweet crude out here. We peek around the globe, see what's going on over in Europe this morning. You've got the DAX up, but slightly up 17 points. Not a big deal out there. FTSE up 9 points. No big deal there. A little different story in Asia. They were having a little party last night. Question is, were we invited? I think so. I think we were invited. I know you were invited. I was invited. You had the Nikkei up 120 points. That was up 0.8. The Hang Seng up 500 points, 498.92 to be exact. That was up 2 3/10 out there. The Shanghai up 41 points, nearly 2% as well. So they were having a good evening in Asia. I guess the folks that weren't invited were the folks in Europe because they're kind of flat here right now. So maybe they're just waiting for you and I, for the U.S., to lead the dance step of the markets. Let's go check out the dance step of the markets. Let's start off by taking a look at that EKG, the 30-minute chart. We'll do it here for the NASDAQ futures, the NQ. Why the NASDAQ futures? Because this has been where the real struggle has been in the marketplace. Here's where the weakness is. The NASDAQ futures, if you're watching us on TigerTV, you can take a look at that wide-ranging bar that took place at about 4 to 4:15. This is a 30-minute chart that we're looking at on my chart out here and my screen, and that represents the release of the Google numbers out there. That disappointed. The market moved down. Of course, we saw in the actual action of Google in the following trading session, because here's the future, so it's the after market out here. It really wasn't that bad at all. In fact, we'll take a look at that stock chart for sure. But where the weakness is, and that's important to be paying attention to, because after the bell today, or really I should say at 4:30, I believe, is when Apple will be releasing their numbers. So the question is, are we just simply seeing a move here where we're just simply setting up the first real large A to B equals CD down inside the futures coming off of that June 24th level? Well, if we do take a look at what has taken place thus far, and if we take a look at the low that was formed out here coming into the time frame, again, it's a 30-minute chart that we're looking at, 1:30 in the afternoon on July 19th. That low is 30.50. What the NASDAQ futures did is they made their first A to B equals CD up. The question is that the end of the move? Was that the corrective move that took place at 12:30 on last night, July 23rd. So last night it moved up. It completed an A to B equals CD as it got up to that price point of 30.60. Now, 30.65.42 would have been your 0.618 retracement level, but the reality is that when H.M. Gartley, if you take a look at his book, he didn't make the requirement that you needed to make a 0.618 retracement out there. So this qualifies really as a Gartley sell pattern. But what it looks to me more likely, what is really taking place out here, is perhaps that what's really going on, even if we see a push lower as we come into the 9:30 to 10 o'clock time frame or so, there's really a buy pattern that's actually being set up here on the 30-minute chart, and that would take a push down into about the 30.47 level. You'd have a 1-to-1 small A to B equals CD. You see the move down so far off of that completed larger A to B equals CD pattern, the one that completed here at 12:30 earlier this morning out here, that the move down has been very, very tepid. You had one wide-ranging bar at about 4 a.m. this morning. I don't know what was really behind that move. We did have one more wide-ranging bar that was coming in between the 8 and 8:30 session out here, and those two wide-ranging bars suggest to me that we ought to see the NASDAQ futures push down into about that 30.45 type area. That would set up your Gartley buy. Then that would set up a move higher. That move higher here would form our next A to B equals CD up. That A to B equals CD up would take us into that 3,065, 3,067 type range. That's the pattern that is set up here at the moment. Right now, what we can see is that prices really has made that 100% move, just simply taking on the B point that took place here at 5 a.m. Just trying to get get some clues as to the market and what it is doing. Of course, what you really also need to do is take a look at the bigger picture. And so that means that we need to go over and not take a look at a 30-minute chart, but let's go take a look at the daily chart of the NASDAQ. As we take a look at the daily chart, what the price is doing here right now, it's just tinkering with the highs from May 22nd, 3,053. And that's really going to be key out here, because as we take a look at all of the other futures contracts out here, they're all above or just slightly above the May 22nd level. But this is the weak link. This has been the weak link here in the market, and so that means that we need to be paying attention to the weakness and see if we are going to see if the market's going to push lower or push higher out here. And if we do take a look at as we are taking a look at the NASDAQ futures, let me just switch over and do one thing here while I am thinking about it. Let's see, can I do that? Yeah. So as I take a look here at the NASDAQ futures, one of the things that I wanted to pay attention to is this candle right here. But as I do some computation, this looks like a hammer candle, smells like a hammer candle, but just really not enough of a push down into the lows out here. So this candle just tells us, you had the bears pushed the market down, the bulls really stepped in, but it's really not a hammer candle. So the real price to be paying attention to today, 3,050, 350. As long as we're in on the daily contract out here, we can take a look at the ES Mini. You can see that this is above that May 22nd high. That number is 1685.75. You're at 1693. What does that really set up? That sets up a move to 1721-ish out there. That would be your 1.272 expansion of the May 22nd high to the June 24th low. So as long as price stays above that May 22nd high, you've got a real breakout here. Doesn't matter whether it's on light volume or not. Just simply price can easily move up to the next floor of that next elevator. If we go take a look at the Dow here, you got the Dow futures are up. The Dow futures here just above that May 22nd high. We've had 2 rejections of that area. The question is 3 times the charm today. And so that is something that you want to really pay attention to. That May 22nd high inside the Dow futures is 15,523. When you get 3 tests of an area, 3 or more tests of an area, that becomes strong something. In this case here, it would be strong resistance. Now, what's interesting about that is I can give you the scenario where, let's assume that for all intents and purposes right now, that we see the Dow futures close back below and you get a rejection of that area. And tomorrow, it gets up above it. If it gets up above it, comes back and tests it, old resistance will become what? That's right, it'll become new support. But we've got to take this one day at a time out here. And right now you've got the Dow, you've got the S&P, and most certainly you've got the Russell 2000 above the May 22nd level. Of course, the Russell 2000 here completing, from a price projection standpoint, completing that 3 drive to a top pattern, but doing it early, July 26th. So what is today out here? Today's the 23rd. So July 26th would actually be the time frame that this would complete. Be interesting to see if price just simply continues to move sideways here, having completed the 3 drive to a top pattern inside the Russell 2000. 877-927-6648. Give us a call, folks. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks, and I do like looking at the stars, but did you check out that big, round, full moon last night? Came in yesterday afternoon. We had the moon at perigee. That was on Sunday, I believe, so it's when the moon is closest to us during this cycle out here, so big, bright, full moon out there. If you didn't catch it last night, check it out this evening. A lot of companies out with earnings. Not a very smooth transition there from moon to companies with earnings. But a big earnings week out here. Let's take a look at some of the equities here moving in the pre-market. We'll start with Penn National Gaming. PENN is the ticker symbol. They're down about 6% as we speak right now in the pre-market. Let's see what they reported. Their numbers go like this. Revenues of $804 million versus $748 from last year. So nice job there on their Q2 revenues. They beat the Q3 revenues also beat. They had a net loss of $12 million versus a profit of $66, and that may be one of the reasons why it is getting hammered. Now, its trade down had a nice big breakout here on the session of November 16th. Their market obviously made a low here, and in the case of Penn National Gaming, they were partying. They were off to the races big time, 11.2 million shares. Now, the bottom of that candle is $50.50. Right now, last trade here in Penn National Gaming fired off at 50.59. So it's going to trade right into that area, which is going to be very close to the most recent swing point low, which was 49.67 on June 24th. The high there, 51.51. So that's what it's going to be trading into. That only has 829,000 shares there. It may actually go ahead and break that B point. We'll see what kind of volume. We'll come back and take a look at it maybe during the second hour of programming today. But this could be setting up an A to B equals CD down. Now, interestingly enough, if you go from the A point, in this case here, which was April 24th, the high out there, 59.93, down to the B point, that was the June 24th low that we were talking about. And the retracement that it made very shallow here, that retracement coming into July 18th out at 54.38. The 1 to 1.618, A to B equals CD, price projection would be 37.77. The very top of the breakout, meaning the candle prior to the breakout on November 15th. The high there was 37.75. So if this thing does break today, and it does break with volume, that's actually where it's headed to. It's headed back to complete and fill that gap to make a 1 to 1.618, A to B equals CD down. But first it's going to have to bust through the untested support area, we'll say, of that November 20th candle, 45.48. Once it gets below that, then it will be inside the gap, and it should go ahead and complete the move down to November 15th. But we'll see what kind of weakness it has at the open. It's just because it's going right into a big sign of strength from November 16th out there. Let's take a look at some of the other equities here that are moving out with numbers. Let's see, what are we going to choose from? That was Penn National Gaming. How about to the upside here? We'll take a look at some companies that maybe we don't often take a look at. Let's look at Ameritrade. AMTD is the ticker symbol. They are trading up this morning. Where's AMTD? Maybe I don't even have it on here. How about that? I would think it would be in front. I don't. So let's go ahead and put it up on my chart. AMTD. We'll go see what they actually reported from a numbers standpoint while we put this stock chart up on my screen. Ameritrade's numbers go like this. And they're trading up 3.5%, about 95 cents. Revenue of $725 million versus $687, and operating income $298 million versus $254. So it's going to be taking out it looks like it's going to be opening above its most recent swing point high out here. Again, we're looking at Ameritrade. It's trading right now at $27, and the swing point high out here is $26.54 from July 11th. So it's going to move above that. Let's see if this is at all-time highs. Let me put this on a weekly chart out here as we take a look at Ameritrade. Yeah, it most certainly is. Let's see. How about this? It's going to go right against this high from January 27, 2006. That was 26.37. So that's what it is trying to take out. On the weekly chart, that had volume of 64 million shares. We're nowhere near that here in the days of summer. But this thing could actually be breaking out, or it's going to run right into resistance. So we'll see on Ameritrade if it can hold or close above 26.37. Certainly it's going to gap up above that level, and that's the 2006 high out there. Let's see what else we got. Domino's Pizza, they were out with numbers. Domino's Pizza looks like they sold a few more pies out here. Net income of $33 million versus $28.1. Maybe they were putting a little bit less pepperoni on some of their pizzas. They did revenue of $414 million versus $376, so they're having a decent morning out here. DPZ is their ticker symbol, trading up about 1.5%. You got Lockheed Martin, they're up 2%. DuPont themselves up 4.5%, up 4.75%. That'll put a little bit of energy into the Dow. You got Texas Instruments trading up as well. Netflix down 4%, but not a big deal. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow at 55 points. Trade out at 15,601. S&P's up 2.5 at 1698. The composite up 4.5 at 3604. Russell 2000 up 2 and $2.60. Trading at 1056. Google up 37 cents. Apple down 94. Microsoft down 2 ticks. Intel up 9. Cisco up 3 pennies. The big loser in the clubhouse at the moment is Netflix. So you got Netflix off $4. Penn National Gaming, which we took a look at before the bell, and we saw that was traveling down into some pretty significant support out there. Illinois Tool Works off $2. That's off 2.5%. Broadcom down $1.54. Reynolds American off $1.42. Travelers down $1.18. Let's take a look here at Netflix, with it being the leader to the downside in the clubhouse right now, and really not a big deal out here. If we take a look at Netflix right now, traveling out at 256.91, opened up at 251 out there. But you can see Netflix here has got quite a bit of support. The first level of support inside Netflix, which it hasn't even tested today, would take you to the April 23rd gap up, 16 million shares there. That low has been tested, even just slightly below that. Let me see. That low may have been tested and has held. That gap up had, by the way, 16 million shares. If I did, I just said it again out there. So that area is your first level of support. That gap, of course, you could always get down and test the gap, but doesn't look like that's what the results are going to be based on their numbers that they released out here. The bottom of that gap would be your April 22nd level. That has not been tested. Has another nice sign of strength out here that takes you back into the time frame of January 24th, when it moves higher with conviction with about 27 million shares. The big volume came on the 25th versus the 24th of January out there. So that's another area of strong support inside of Netflix. So this is not one that I would suggest that you try shorting out here. It just has too many levels of good support just slightly below where it is traveling at right now, meaning the 219 area, and it's trading at 260. I suppose someone might say, hey, that's a good move down. Well, it doesn't look like it's ready to move down here today. That was on Netflix. Let's go take a look at some of the things here that are moving to the upside as well. DuPont, they were out with numbers. In the case of DuPont, let's see what they generated numbers-wise out here. They generated $1.1 billion in operating revenue, $1.1 in earnings. Let's see, net sales, $10 billion versus $10.2 billion out here. DD is the ticker symbol, and we're going to pull that up in a moment as soon as I find it on my screen. Here we go. So gapping up this morning, has some decent volume so far. Only been trading for 7 minutes, but volume-wise, 1.8 million shares. Had a nice sign of strength with 17 million shares just a few trading sessions ago on July 17th. This on a longer-term chart out here. Let's put this on the weekly, see what it is doing. It is up above... so it's broken out of a consolidation area. That consolidation range taking you back into the high out here from April of 2000, April 28th, 2000, that high of 56.81. The volume there on that trading session was 27 million shares, and looks like you are up above it with 39 million shares. So looks like we've got a real break here in the case of DuPont. Let's put this on even a longer. Let's put it on the monthly chart. Be easier for us to take a look at on the screen, so we can see that we can see the resistance area. We'll just put a line across here. Let's put it up right about at. In the weekly chart, I would still say, let me just put a line, and we'll just simply go ahead and manually move it. But, actually, let's just not even manually move it. This really becomes the breakout range. And the consolidation, I would have to say, we'll go ahead in the case of DuPont. What we'll do is we'll use the conservative consolidation range out here. So we'll just measure what that is. That way we can come up with our first measured move as DuPont breaks out of this level. So we're going to use right around the 3650 level to the high of 5450 is what we'll use. So we'll use 3650 to 54, so 3646. So you got about an 18-point move. So an 18-point move says that what DuPont ought to do is head up to about 5464. So you got, 72? So 72 is going to take it all the way back into the swing point low, 71.81 from May of 2008. Looks like that's the all-time swing point high here. Yeah, so $72 will take you right into the swing point low of May of 2000, and not May of 2000, May of 1998. A long time coming for anybody that happens to be holding on to those shares that were purchased during the month of May in 1998. But it looks like that is where DuPont is headed to. If we take a look at just A to B equals CD patterns on this, the B point on the monthly chart is going to be April 30th. That has 96 million shares out there. and it's already got 78 million shares for this month. And with today's move, today's gap up, it should have some additional volume behind the move. So the A to B equals CD. Another way to take a look at this takes you to 71.82 as well. So now you've got a double confirmation that DuPont should be on its way, not overnight, but should be on its way up into about the 71.82 type mark out there. Let's see, that's what else we have moving here. You've got Lockheed Martin, LMT is the ticker symbol. So let's go take a look at Lockheed Martin, see what it is doing out here. That gapped up this morning. Let's take a look at any volume behind this move here and see what it is doing volume-wise. So far today, 217,000 shares. Doesn't trade a lot. Yesterday did 1.1 million shares out there, so not too bad. The bad thing on this is that if this ever does fall out of bed, February 26, 2013 is where this would likely head to, and that would be a bummer because that's $87. It's at 118 right now. There's a little bit of a sign of strength out here that could maybe hold this in place, which is right around the 108 level. But the big volume bar happens to be down in that February of this year's area. Let's put this on a longer-term chart as well. See what Lockheed Martin is doing here. We're going to take a look at the weekly. So it's trading all the way back into its swing point high. Maybe it's going to find a resistance at this double top, which is back to August of 2008. That top is 120.30 out here. So it looks like that is going to be tested. Volume there on the weekly was 12.8 million shares. You're coming into it so far this week with light volume. It's just Tuesday, but we'll see what kind of volume gets behind the move here today. That was on Lockheed Martin. LMT is their ticker symbol out there. Let's take a look at the Lexmark, the printer company. LXK is the ticker symbol, spinoff from IBM many years ago, and that is trading up about 9%. So LXK is the ticker symbol. I don't know if they must sell things other than printers, but that is probably the core business. Of course, let's find out if, in fact, that is the core business here. Let me see here. Manufacturer supply, printing, imaging, device management, managed print services. Yeah, so basically just in the print business. Gapping up this morning, not bad. Taking on, it's a swing point high that takes you back into the February 21st, 2012 level. It's only got 800,000 shares at the price of $38.34 out here. This is completing an A to B equals CD up. Let's go see if this was confirmed. Your 8-point inside Lexmark takes you back to the lows of July 2012. So in 1 year's time, this thing has gone from a low of 16.10. Today it's made a double. It's trading out at 37.81 out here. Let's go check out the A to B equals CD. So it's made more than the 1-to-1. It's done the 1 to 1.272. That B point on this is January 28th, 2013, 2.5 million shares. And as price got above that area, did it with 2.2 million shares. So it got above that area with pretty much with volume. You're very close to it. Now what we can see, though, is that C to D leg, quite frankly, was stronger than the A to B leg out here. And it looks like Lexmark wants to go ahead and take out those highs and travel on to the next area, which would be about $42.44. That'll take you right down to an area where this thing broke down back in 2010. That was October 26, 2010. That price level, $42.10. $42.44 would be your 1 to 1.618 A to B equals CD, and that looks like that's what Lexmark would like to do out there. Let's go check in on the commodity sector, see what we have going on out here. As we take a look at gold, you've got gold having really broken out of that descending price channel. That says that it would be tested, right? You break out of a price channel if it's going to be a real break. In this case here, because it's a descending price channel, moving to the upside of this means that if it stays above, it would be a real break. And those are, the descending price channel. These are lines that were drawn in here weeks ago. And as we take a look at it, that's exactly what has taken place so far today. I'm going to blow this up on my screen here. You can see so far the low today, 1325.60. You get a test of that area on a couple of occasions and says, okay, you've got a real breakout. It was traveling in this little rising or sub-correction price channel out here, so still within inside this, but it looks like we've got a real break inside Goldilocks. And I think yesterday we just saw a little bit of a short covering rally. Had a nice move, went from $12.95, really went from below that, let me see, went from the close of $12.95 up to high yesterday of $13.39. So a pretty decent first move. It also broke the trend line, a shorter-term trend line, coming back from April the 10th. The touch point out there, the top being 1588.50. And your next touch point area would be the June 6th high, 1423.30 out there. So this thing has broken with conviction, with some volume behind the move out here. And that says that the next stop, now we can see here is so far what gold also did is it stopped at the 0.382 retracement level. That retracement level I am taking a look at is coming off of the downdraft that began April 10th. And that high was 1588.50 to the low that was put in on June 28th out there. The number, the 0.382 number, 1335.70, trading at 1329 right now. So it makes sense that it let some folks off of the elevator out there. But the target here, first target should be 1432. That's your 0.618 level. But really, when we take a look at retracements now, you really now need to, that this thing has broken the trend line, you need to come really all the way back to October 5th. 2012, and that's where you're going to start your retracement level. And that was at 1798, and then you're going to go all the way back down to the low out here. And what you're going to see take place is right around the 1415 to 1432. You get a little conjunction of a 0.382 retracement. That's of the larger move, as well as the 0.618 retracement of the area that we first took a look at. So you've got gold on its way to the 1415, 1432 area. It's at 1329, and of course, I've been a big believer here that we've put in I think what we've done is, what gold has done is put in one of those historic lows out there at that 1179 area. And the move should continue to just simply be northward. And so that is on gold. If we take a look here at silver, silver right now trading out at 2020. It too doing a decent job of breaking out of its little sideways consolidation area that was really set up going back into the June 21st high at around 2010 down to the lows out here. I would say the real consolidation being at about 1860. Silver still not as strong as gold, but gold will go ahead and pull it up. Where this is headed to, well, certainly the $22 price mark. But again, just like we did in gold, if you go back into the October time frame, we'll go to October 2012, the top of the larger consolidation area that it had been traveling in. The first stop on silver should be $24.78 out there. It's trading at 2018 right now. Light sweet crude, let's take a look at this here for a moment. This is the weekly chart. This shows you a real breakout, a big-time breakout. This was the monthly chart, the monthly descending price channel, the monthly trend line. It broke everything, did it with conviction. Again, it's a weekly chart that we're looking at. It actually broke out here the week of July 5th. Now, what it has not done is come back and test that area to confirm for us that the breakout is real, like we took a look at. Well, it has not done it on the weekly chart, so far, and neither has gold for that matter. If we take a look at the daily chart, let's just switch down into a daily chart. I mentioned earlier in the show we got our first real reversal signal here yesterday, and that's when it completed an evening star, a 3-day candle session. That 3-day candle session being the up day from July 18th, a little bit higher move here on July 19th, and then yesterday's candle down, cutting into more than halfway into the body of July 18th. That sets up a decent resistance level now at 109.32. What is clear about this now, and you could actually play this as a trade if you're a shorter-term trader. Now that we got the reversal signal, remember we got a couple of competing patterns here. One of those patterns is this 14.1-year consolidation pattern. That's the longer-term pattern. That pattern is absolutely still in play. That says you've got light sweet crude wanting to make its way up to the 114 level. Now, what is cool about yesterday's trade, it's the first time where we really see any kind of confirmed resistance area. What I mean by confirmed is that yesterday gave us the 3-candle session at Three River evening star, and today we're having some additional follow through with a lower close. That's confirmation. That says if you see a close above 109.32, you actually could play a short-term long play up to the 114 level, because light sweet crude will have broken through a area that should have held as resistance. Right now we've got the Dow up 50, S&P's up 222. We get back from this next break here. We're going to go out to Louisville, Kentucky. We're going to go to Bob, and we're going to take a look at the gold miners, the GDX. 877-927-6648. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Let's go out immediately to Bob in Louisville. Bob, thanks for calling. Thanks for holding. How are you doing this morning?
Well, I'm fine, and thanks for taking my call. I appreciate it.
My pleasure. You want to take a look at the GDX, which is the Market Victor's Gold Miners ETF. Tell me what you're doing, how I can help you.
Well, I think the GDX kind of extrapolates to the DUST and the NUGT, right?
Yes.
Okay. Yesterday I sold my my nugget at 778. I had a sell order in at 790, which is the 1.1 on the up move.
Yes.
And but I was up to that point, and gold had just hit 1335, and I said, man, I'm taking my profit. So I got out. Now I'm looking to get back in. So I don't know which of those symbols you think is the best guide of where the miners are going real short term, because it sounds like in your previous session that gold's going to run on up. So I mean that's the place I want to be.
Yeah, I think that we have put in a serious bottom inside the gold miners, inside gold and silver out there, and inside now. You know, I don't myself personally. I don't play the dust or the nugget. You'd want to just make sure that the holdings are basically similar. For example, inside the GDX, what's cool about the GDX is your top 4 holdings represent 40% of the weighting structure inside there, around 40%. Barrick Gold being the top weighting, Gold Corp, Newmont Mining, and Silver Wheaton. You can even throw Yamana in there, and you're probably at about 45% of the weighting structure. And it's always good when you're playing an ETF to understand, you know, what the actual components are doing out there. So it means you can really keep track of 4 or 5 stocks and also give you a feel for what is going on out there pattern-wise. And that might be helpful for being able to identify what your next move is. For example, you know, if you were playing the Qs and you weren't paying attention to the pattern inside Apple, you know, you would be putting yourself at a disadvantage. So in this case here, you know, I would say go take a look at those 4 or 5 equities: Barrick, Gold Corp, Newmont, Silver, Wheaton, and Yamana. In fact, the top 10 holdings inside the GDX represent like about 65% or so of the entire structure. So I would be, you know, keeping a close eye on that. As far as where it could come back to as we take a look at the GDX, normal area, what I would be looking for on the chart is really where you take a look at either old resistance or old support levels. And certainly in the case of the GDX, what it did is it closed above the breakdown level, which was June 19th. The bottom of that candle is 26.42. Now, it's not above that candle, which is 27.70. So that does suggest that you could see a pullback here. Now, that candle had 21 million shares, and yesterday's test was with 43 million shares. So it is telling you it's pushing higher with volume out there. And so what you want to do, and congratulations, by the way, on the trade, you know, and taking some profits. There's nothing ever wrong with taking profits off the table. Where would this pull back to? I would say, you know, if this could pull, the first area where you've got to be focused on is probably maybe that July 17th high around 25.99. Maybe it's the actual high from June 20th at 25.44. And if it can pull back into that area and hold, we'll call it the 25.44 mark at June 20th, and hold and come back on lighter volume, that would be the first place where you would probably go ahead and try to put a trade on. That's also going to be pretty close to the 0.382 retracement. Your other area, probably 24.33 if in fact it can pull back that far. I hope that helps you, Bob.
Sure does, and I appreciate it.
My pleasure. Folks, it is Terrific Tuesday. If you're off to start your day, have a fantastic day. And always remember, you have an amazing power within yourself. And that power, it's so strong, it'll produce a life of abundance, cure incurable diseases, build billion-dollar businesses. But most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday. Look forward to seeing you soon. Take care. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.